Welcome traders to another Tick Mill trading update with me, Patrick Munley. Want to update the S&P 500 view using the E-mini futures contract and put together a trade plan for what is poised to be quite a volatile week ahead and identify some potential action areas and price objectives that we can realistically target. Before we jump in with the macro and the technical updates, just in case you're trading the spot price, so you're the S&P 500 as opposed to the futures contract. Currently, you need to, if you're going to use the equivalent levels that I provide here, you need to subtract 32 points at the moment to get the equivalent levels for the spot market. So, as always, before we jump into the technical side of things, let's take a look at the macro slate now. Obviously, a bunch of central bank meetings coming up this week. RBA are out tomorrow, and then we have the BOE on Thursday. We have the Bank of Japan meeting minutes coming out on Wednesday. And then we have obviously the Federal Reserve also on deck this week, and they are due to announce their rates on Thursday evening as well. But really, if you pardon the pun, I guess the macro event that trumps everything this week is going to be the US elections. Now, we have the elections polling underway. Advanced polling is already underway. And the main event is going to be taking place tomorrow for European traders. Initial poll results can be expected around the 10 p.m. time GMT. But realistically, the result, if there is to be one that is determined of the night of the election, is likely to come in around, or certainly the swing states should be known around the 6 to 7 a.m. GMT time on Wednesday morning. So I just want to keep those in mind. It's obviously going to be what could be a major catalyst for these markets. Now, I just want to pull up some seasonals here. Excuse me. So this chart just identifies the trend for price action in the S&P 500 around the US elections. This is taking into account the last 6 US elections over the past 25 years. You can see we tend to have a dip 4 days out, as we saw at the back end of last week, where we tend to trade up into the election. And then with election uncertainty, we tend to see a pullback. This chart goes from the election day minus 5 days to post the election plus 5 days. So you can see things start to stabilize. And certainly in the 2 to 3 weeks after the elections historically, if markets are poised to make a move to the upside, that's when that tends to kick in. And from a seasonality perspective, over the last 14 years of data, you can see that that November 20th period has a tendency to mark the low heading into the well telegraphed Santa rally. So we'll see if that plays out again this year. From a technical perspective, let's review the charts and see where the key levels are that I want to pay attention to as we head into this week. So the weekly close last week took us right to the wedge support area at the 57.40s. The volume weighted average price on a weekly close basis has now flipped bearish, and so that would portend the potential that we test the midpoint of the 20-day look back now, which comes in at the 56.16. You can see we've got a decent volume shelf there. And then below there, we have the year-to-date volume point of control, which is at the 55.30s, which roughly coincides with the ascending trend channel for the year as well. So those are some key levels to keep in mind on the weekly time frame. Also note we still have significant momentum divergence, and the stochastic, multi-time frame stochastic has started to roll over in unison with the price action. So those are the key levels. On the daily time frame now, we want to just check in with the implied volatility risk for the week. And markets are pricing in about 151 points of range either side of the Asian Open. So on the top side, that would see us trade up to the 58.90s. And on the downside, that would actually see a move down into the 55.90s. So again, useful to mark those levels up on the chart as they tend to provide at least realistic targets for trading in either direction and or potential reversal points. Just on the in the top left-hand corner here, you'll see my current positions. I've trimmed the book down over the past week or so, so I'm only holding a long Bitcoin. I've got a long euro in play, and I'm still short the S&P from last week, and I've locked in about 40 points of profit on that. And we will. I'll talk you through my game plan now for the week ahead in terms of the weekly setup. So on our weekly plan chart, my bull bear zone for the week is going to be at the 57.98 to 58.08. That coincides with an equality objective versus the current swing structure we have in play here on the 4-hour time frame and the midpoint of the projected channel. So if we are going to trade higher, we're going to need to see some closes above there. I will be watching for any intraday rejections in this zone to add to short exposure. The first downside objective for me on the week is going to be that 57.30 to 57.20 area. Could again see a bounce from there. And if things do start to get materially weaker, and I doubt that's going to happen in front of the election, I think we're likely to range for today and tomorrow, and then into tomorrow night as the results start to come out, things likely get a bit more volatile. But those are the key levels that I'm tracking initially. Above us, we also have resistance here at the 58.25 to 58.35. So if we do get above the 58.10, that would be an area where on the intraday timeframes with acceptance, so consolidation and then break higher, where you could add to long exposure. But I'd certainly be careful as we trade into those 58.20s, 58.30s above there, and then we can start to think about an acceleration to the upside. The trend channel resistance, the current corrective trend channel resistance, now coming in broadly in line with weekly projected range resistance at the 58.60s, and we know above there we have the 58.90s as the implied volatility range for the week. But again, I'd be paying attention to these areas as certainly on an intraday time frame as decent trading locations, and looking for confirmations. Personally, I obviously use divergences with the cumulative delta as a key confirmation, but these are key areas to pay attention to as we head into this election period. Now, if we take out heading into the elections results as they start to come through, if we start to trade below the 5,700 handle, remember we have a contract rollover gap here down to the 56.30s. If we fail to find support there, and that coincides with the value area low for this 4-hour profile. If we do find support there and trade back into this 57.30, 57.20 area and find resistance again there, then we're targeting that move down into the 55.90s, which is that implied volatility support that we talked about in the daily time frame. Also coincides with monthly projected range support as well. And we obviously that's just adjusted now for November. So those are the key levels that I'm paying attention to as we come into this week. Obviously, I will be updating in real time as we get going into the election results themselves and see where opportunities develop. What I've learned over the years is that you get a lot of head fakes in and around these election results, and you certainly want to reduce size in terms of your trading and potentially use slightly wider stops as volatility picks up. The VIX is trading 20, just under the 21 handle, so that indicates an increase in volatility, and I expect that to pick up as we head into tomorrow evening. So just be cognizant of that. And the other key aspect I've learned as well over the years is to not chase any of these moves, as you often see moves that look like they're going to extend, but you get sharp reversals based around news flow. So for those of you who are less active in terms of screen time and engagement in the markets, it's better to wait for the dust to settle and wait for some of those key levels that I talked about in the higher time frames to look for opportunities. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.